Hey guys, welcome back to the Technical Analysis YouTube channel. Today we'll be covering another stock that I own, and this is also one of my favorite stocks besides Nvidia. And this stock is none other than Google or Alphabet. Okay, so Alphabet, I wanted to cover this company because yesterday they just announced earnings, the Q1 earnings for 2025, and Google has managed to beat expectations for their earnings, and therefore the price of their stock opened higher today. But as you can see right now, it's experiencing a bit of a sell down. The share price opened at around 165, but right now the current price is 161 at the time of recording, which is 2350 hours at the time zone of UTC plus 8. So this is quite normal for the sell down because as you can see, this price opening is pretty high. It's above the 2% deviation of the Bollinger Bands indicator. So again, I'm using the Bollinger Band indicators for the stock chart analysis. So this is one of my favorite indicators that I always use. So when the stock price opens so high, it is actually normal to expect some reaction of a sell down, which explains the red candle today. Okay. Nevertheless, the stock is still up about 1.5% as compared to yesterday. And again, this is because of the good news that Google has beaten the earnings yesterday. They announced earnings yesterday and the stock rises. So what happened is that Google also decides to raise its dividends and also authorize $70 billion in buybacks. Okay, so yeah, you can see over here this was the pre-market uh value of Google. The Yahoo Finance News is covering it. And I also want to show you guys what is the earnings per share. So right now the earnings per share of Google is 1.89 and revenue is increasing. All right, so this is a very more detailed breakdown. You can actually search up Yahoo Finance for more on Google earnings, but I just want to inform you that Google has performed very well in quarter one despite Trump's tariffs. But of course, this is still too early to say, right? Because tariffs only rolled out in April. The tariff announcement was only announced in April, so we have yet to see the full-blown effects of the tariffs, and this could be one of another reason why people are selling to lock in the profits if they have bought at lower levels. So personally, I've added a bit of Google at the 150 level, but again, similarly to Nvidia, my Google average price is pretty high. It's around this area, 179. So I wouldn't be adding at this 16 plus level. Anything below 155 and below, then I'll be interested. But anyway, for Google, it's a pretty good stock because the P/E ratio of Google is very reasonable as compared to the other Max 7 companies. Right now, at this price of 16, approximately 161.6, the P/E ratio of Google is under 20 at around 18. So it presents as one of the cheapest and most undervalued Max 7 stocks that is available for purchase right now. So it is a company that I'm always watching and I'll be always be keen to add. Of course, I will be keen to add if it falls below a more controlled level and not at this above two standard deviations of the Bollinger Band. So probably somewhere around 155 and below, ideally around 153 or even 150, I will probably be adding. All right. Of course, whatever I shared here is not financial advice. Please always exercise your own due diligence and research before engaging markets. Okay, with that, I'll end this video. I hope you guys find it useful. Do like, share, and subscribe to my YouTube channel for more videos like this, and I'll see you guys in the next one.